What's going on? Today we're here to find out the real reason you can't buy a house. Now, how long have you been saying that you're gonna buy a house for you and your family? Do you hate the fact that you had to miss out on the opportunity to buy a home while interest rates were at a historical low? Do you want to make sure that your credit is absolutely ready for your perfect next time to buy instead of letting time or the opportunity pass you by? Finally, have you ever wondered why it seems so impossible to improve your credit and be able to purchase a home? Well, right now I'm going to show you how your SAT is keeping you from being able to buy a home. So I'll explain what I mean in a minute, as well as tell you what to do so that you'll be able to become a homeowner finally. Also, I'll share a couple of success stories from clients that we use these strategies on and they were able to qualify for homes themselves. Okay, now to get started with this video, we're going to start things off on a positive note. What I want you to do is go down to the comments and I want you to leave a comment with the month and the year that you are going to be purchasing your home. Now, you might not believe that that's possible, and you probably have a whole bunch of doubts in your mind based on what you've seen so far in your journey to try to get a house, but I'm letting you know that your doubts only push the things that you want further away from you, and it's about time that you had some acceptance in the fact that you are actually going to be able to get this house so you can start attracting it to you. And I know it's just a comment, but right now this should be the start to you starting to continuously write down the things that you want. Why? Because doing so is based on a biblical principle, and that's why it's going to help you. Now, that principle is in Habakkuk, I know I probably said that wrong, chapter 2, verse 2, and it says, "And the Lord answered me and said, Write the vision and make it plain upon tables, that he may run that readeth it. For the vision is yet for an appointed time, but at the end it shall speak and not lie. Though it tarry, wait for it, because it will surely come. It will not tarry." And if God telling somebody to use this strategy of writing something down and telling him that it will surely come, then that means that that principle can work for you as well. Now, if you don't know me, I'm Will Frazier, and since 2014, I've helped future first-time home buyers overcome their credit issues so they can shorten the time frame it takes to reach their goals. And that reminds me of a past customer named Vanessa who actually came to me because she was trying to get her first home at the point that she had realized she had paid about $30,000 in rent over 4 years, and she did that calculation and it upset her to know that she made a lot of money. She made a good bit of money. She was a manager where she worked at, but she did not have the credit in order to do what it was that she wanted to do, which was to become a homeowner and stop giving up money for something that she knew that she would never own. And it wasn't that she didn't try to actually do something to improve her credit. She had actually, over the course of 2.5 years, tried about 3 different companies before, and she did not see any success with those companies that she worked with. And in that time frame, she lost about $2,000 in money, for paying for these different places, trying to get some results, just to end up at square one where she started at. And then, of course, she ended up coming to us, and I'll explain more about her situation in a minute. Now, let's talk about how your SAT is holding you back from getting your home. Now, the first letter, the S, stands for score. Now, this is something that most people focus on the most, but is actually not the most important thing that they should be focused on. That is because it takes other things to determine the score, so those other things are what's going to actually make the score move. But the score is still important because there's a certain number that you have to hit, and you need to know what that number is in order to make sure that you walk into a lender's office with confidence, knowing that you're more than likely going to get approved. Now, that place that you want to be as far as your score, and what we're talking about here is going to be your FICO score. You want to be at about a 640 or better on at least 2 of the major 3 credit bureaus. Now, the reason why I'm telling you you need to have a 640 or better on at least 2 of the 3 bureaus is because at the lender's office, they're going to check all 3 credit bureaus, and they're going to go with your middle score. Now, your middle score is going to be whatever number is in the middle numerically. So basically, if you have at least 2 of your scores at a 640 or better, one of those scores will end up being your middle score. And the number that you want to hit is ideally at the floor about 620. Now, there are different versions of credit scores that are used when you go to the mortgage lender. They actually use a older version for mortgages, so you don't know how your score might end up in that lower scoring model, and most of the places that you check your credit score are going to be a newer version of FICO, if it is a version of FICO. So that's why I said trying to get your score higher than what is usually going to be needed to be at a good place, so that you know that you have accounted for any possible variation that might be there. Now, there are some places that's going to tell you you can get approved with a lower score, but I promise you that is not what you're going to do. That's not what you're going to want to do, because it can actually end up costing you a lot more money, making you have to jump through more hoops. So that's definitely not something that you want to do. Now let's talk about the A in SAT, which is going to be talking about the accounts on your credit report. Now, there are a few major things that you want to look at when it comes to your accounts on your credit report. There are different things that can affect you. Right now, I'm going to tell you to not worry about the inquiries, even though that is also something that most people put a lot of importance on, but is also one of the least most important things when it comes to your credit and getting approved for a mortgage. There are instances where they do look at those, but for time's sake, we're going to go ahead and focus on the major things that you really need to know about. And that is going to be the collections and the charge-offs. Now, there are late payments as well, but of course, you know you don't want to be late on anything on your credit report, at least within the last 12 months. That is going to put you in the best position to not have late payments affect you in an additional way that we won't discuss here, because again, we're going to focus on the two major things. Just know, try not to be late on anything within the last 12 months before you try to apply for a house. Now, the two most major things in regards to accounts is going to be your collections and your charge-offs. Now, collections and charge-offs can be anything like a loan, a credit card. In regards to charge-offs, it could be a car loan. Now, when it comes to collections, that is going to be third-party companies that show up on your credit report, collecting for things like your cable bill, medical bills. It could be an old apartment, payday loans, utilities, different things like that. Now, when it comes down to this area, what most people usually go to, is their normal go-to thing to do, is to try to pay these things off. Why is that? Because of course everybody has been told just pay off your stuff, and that's gonna help you to get into a better place. But I'm gonna tell you now that that is not the best solution for improving your credit in order to get a house. Now, why is that? There are certain dates on each account on your credit report, and if you try to pay those type of accounts, it can cause your credit score to drop. And that's why you don't want to do that, because you've probably been waiting a long time to try to get a house already, and you don't want to do anything that's going to put you back even further from trying to get your house. Now, when it comes to charge-offs, there are a lot of lenders that will actually overlook charge-offs and not hold them against you. And if you have ones that are old, then they're probably not counting in your score anyway, so they're probably not affecting you at all. And with that being said, it would be foolish to try to pay them, because you would be dropping your score and causing something that's not affecting you and that a lender won't count to actually start affecting you because you paid it. And now when it comes to the collections, if you pay a collection, usually your credit score is going to drop for sure, or you might pay out a lot of money and then nothing happens. Either way, that's not something that you want to do when you could have been using that money towards a house, and you don't want to take the sacrifice of losing the points that you'll possibly lose from paying that collection either. And one misconception that people have is they think that paying off an account is going to be a reason for them to take it off of your credit. But I'm here to tell you that that's not the case. There is no law or anything that says that they have to remove any collections or any charge-offs from your credit just because you paid it. Now, there's one caveat to that we're going to talk about when we start talking about the solutions. But the next thing we're going to talk about is the T in SAT. And the T is actually in the middle of a phrase called debt to income ratio. Now, I know what you're thinking, that he just really reached like that to try to make the acronym work with the T. Yeah, I did, but you're thinking about the wrong thing. We're trying to help you get a house right now. Now, your debt to income ratio is basically the calculation that they use to see if you can afford a house, and it also determines how much house you actually get. And by that I mean the dollar amount that they will actually give you for the total amount of a home you can purchase, like $300,000, $200,000, $500,000. It's all based on this calculation. Now, this calculation is a calculation of your debt divided by your income to see what the percentage of that is. While I have seen some lenders go as high as 50% for this number, I've also seen where most of them prefer you to be around 35%. Either way it goes, the less debt payments that you have showing up on your credit report, and I'm talking about monthly debt payments for credit showing up on your credit report, and the more income you have, the better this percentage will come out in your favor. But a lot of you guys are actually over the threshold for the number that they actually allow, and because this affordability calculation is coming in too high, they can actually decline you. Even if you had a 700 score, even if you had a clean credit report, they can still deny you because of this calculation called debt to income ratio, also known as DTI. Now, I'd like to ask you guys, did you already know this information, or is a lot of this that I'm mentioning to you new? Go ahead and tell me down in the comments below so I can see. So now you know what's holding you back, and now you know what benchmark the lenders are using to measure you up against to see if they're gonna approve you. So now let's talk about solutions, more specifically the 3 moves you can make to get your credit to a better spot and get approved. Now, the solutions I'm about to mention actually helped one of our most recently graduated clients achieve these results. Now, Ms. Brown was able to see almost an average score increase of about 200 points. She started off in the 400s when she came to us, and now she's in the low 700s, high 600s as far as her scores range. Now, she had $3,159 in collections removed, not to mention about $68,000 in student loans removed from her credit. Altogether, it was about 15 accounts in total that were removed from her credit reports, based on using these strategies I'm about to share with you. And yeah, we do use some extra advanced tactics in our company, but the things I'm sharing have also proven to work across the board with our customers in the past. Now, the first thing you want to do is go get all 3 of your credit reports and scores. Now, you want to make sure that you're paying attention wherever you get these reports and scores from, that they are FICO scores, because you don't want to get Vantage scores, which is what you get from Credit Karma. Also, Credit Karma doesn't give you all 3 bureaus. It's important that you get all 3 bureaus and FICO scores so you can see the most accurate information to what you will likely see when you walk into that lender's office. Now, there are a bunch of different credit monitoring companies out there. I can tell you that for all of my customers, I use my Score IQ because they actually give you the FICO scores, and they also allow you to see the mortgage FICO score. And they do it for about $20 less than what you would pay actually going to the FICO website. So they definitely do a good job of giving you the information that you need. And again, that's my Score IQ. I'll put a link to them down below if you want to try them out. Now, once you get those reports, what you want to do is go sweep through your credit report and look at all 3 bureaus. Look at not just your scores, look at everything that's on each credit bureau. Now, it does make it easy to see when they're side by side, so just make sure that you take a look at that. Look for any late payments, look for any charge-offs, look for any collections, so that you know what it is that you need to work on. And that's going to be move number 1. Move number 2 is you want to deal with your collections on your credit report. Now, you want to try to dispute any collections that you have on your credit report. Of course, a good way to get started with that would be a debt validation. And also, if you have any small medical collections, because of the changes to the laws on July 1st, collections that are medical collections that have been paid are supposed to be removed off your credit report. Now, I still at this point have seen people complaining that they haven't removed anything off of their credit reports yet, even though they have been paid, but I'm assuming it's just a slow cycle to them doing that. Either way, if you have little small medical bills that you can afford to knock out, maybe $100 or less than $100, I would say, knock those off so that you can get that taken off, or at least know that they should be taking those off. Anything outside of that is a third party collection on your credit report, you want to try to dispute before doing anything else. Now, to explain to you how to dispute would take another longer video. So what I'm going to do for you is, if you guys just want some letters that already have the information in it that you need to try to send a dispute and just get started quickly, I have a dispute letter library that I'll put a link to down in the description. You can check that out, and that should give you a quick cheat sheet to getting started with that. And if you've been trying to do this already, and you found it to be hard to try to get results, trying to do it yourself, and you just want to hand it off to somebody else because you're too busy to do it, then I'll put a link below to do a consultation with me. I'll take a look at your credit, see what we can do to help you, and then we'll take things from there. But first and foremost, you guys should still be trying to dispute those collections, because that is going to be the low-hanging fruit, and that's going to be the best method of attack for that area in this second move. Now, the third move that you want to make is paying down any open debts that you have. Now, what this is going to help you with is your debt to income ratio. By paying off any small loans that you may have, maybe not your car loan, but paying down any small loans that you have immediately, that's going to take away that payment, that monthly payment from your credit report, and then it's going to lower your calculation as far as your DTI is concerned. Same thing for any credit cards. If you pay those off or down, that will increase your credit score for one, but it'll also take away the payment or lower the payment that shows up for that credit card, also lowering your DTI. Now that is your third step to seeing improvement with your credit. Now, all of these steps are things that we use for Vanessa, and as I told you, she came to us after struggling to try to see some results going to other companies and knowing that it was time for her to go ahead and get a house, and we actually used these strategies for her, and she was able to, within 5 to 6 months, be in a position to be able to purchase a brand new home. And it was actually a new home, new construction that nobody else had lived in. And I was actually her realtor for the transaction as well. So I actually helped her get her credit in place for the home. And then I actually helped her find and get her dream home as well. Okay, so now you guys know that you need to have about a 640 score on 2 of the credit bureaus. You know that you need to be dealing with your collections and leaving your charge-offs alone, especially if the lender that you want to use overlooks the charge-offs. You want to try to first dispute those collections and pay off any small medical collections that you have, just so that they can try to get quickly removed while you're going through the dispute process with the other collections that you may have. And you want to make sure that you go ahead and try to pay off the open accounts that you have, especially the credit cards and the loans that you have that are open, the small ones, so that you can go ahead and pay those down, lower or eliminate the payment that shows up for those, and then lower your overall DTI. And if you follow all of these steps, you could end up in the same position or even maybe a better position than Vanessa or Miss Brown. Now make sure you check out the next video for some more information on disputing if you need that. But again, if you're too busy to try to do that yourself, make sure you click down below, set up a consultation with us. I'll tell you what we can do to help you, and we'll take it from there. I thank you for sticking around to the end of the video, and I'll see you guys next time.